Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and help you to navigate and understand the tax system as it applies to you. So today we're going to talk about being an employee, earning through the PAYE system, and explain why you may have overpaid tax if you didn't earn for the whole of the tax year. Before I talk about that, if you're new here, please do take a moment to subscribe to our YouTube channel. That way you can easily refer back to this information if you need to, as well as being able to find other information that we have available on a whole host of different topics, all aimed at helping you to understand the tax system as it applies to you. If you navigate to the playlist section of our YouTube channel, there you will find loosely catalogued the information that we have available into the information that you will find most relevant for yourself. So back then to why you may have overpaid tax if you didn't work for the whole of the tax year. So say, for example, if you are an employee, you're paid through the PAYE system, you're earning above the personal allowance for income tax, so therefore you're paying income tax, and you don't work for the last month or so of the tax year. This may mean that you may have overpaid income tax. And the reason for this is quite simple. If you just take a moment to think about how the PAYE system works. So the PAYE system, as you will know, works on the basis of using a tax code that's personal to you, that's set by HMRC, that attempts to collect the correct amount of tax throughout the tax year from the income that you receive. Now, how that is applied by your employer is that they will apply the tax code that HMRC has given them for you as an employee, and they will spread that tax code in effect across the pay periods. So for example, if you are paid monthly and your personal allowance was around £12,000, then the employer in effect would allocate £1,000 of that allowance to each of the pay periods. And the reason for this is because to spread the tax impact across the year, because otherwise you would in the start of the tax year be paying no tax until you had used up your personal allowance, and then you would be paying tax on everything. So at the start of the tax year you would have more take-home pay, and later in the tax year you would have less take-home pay, even if you earned exactly the same amount. So of course, for this purpose, it's important that the allowance is spread across the tax year. And this is because income tax in the UK is cumulative, and that means that regardless of your tax code attempting to collect the right amount of tax, your actual liability is going to be based on your total income from all sources that are liable for income tax throughout the whole of the tax year. So this is what's happening, is your allowances are being spread across the pay period. So if you were paid weekly, then it would be divided by 52 weeks. Of course, some years have 53 weeks in the payroll year, but that is dealt with separately. So your allowances are spread for each pay period. So in month one, so if you're paid monthly in April, for example, your employer will pay your pay, and the software that they are using will be assuming that pay is going to be the same for the whole of the tax year. So by the time you get to, say, month 10, you still got months 11 and 12 allowance available. So say, for example, if you left your employment in January and then you didn't work through the months of February and March, then in effect, your allowance would not have been utilised for those 2 months. So when we add the income for the whole of the tax year together, and then we calculate the liability due for the tax year, the amount deducted will have been more because of not having utilised that allowance for the last 2 months in effect. So different people find it easier to understand that in different ways, whether you're looking at the cumulative effect for the whole of the tax year, or you're thinking about it quite simply in that and not utilising the allowance. The net result is going to be the same in any case. If you left an employment in January, for example, on monthly pay, you didn't work for February, but then you started with a new employer in March, because that is still within the tax year, that March pay would enable the tax code to be applied for the whole of the tax year, therefore bringing your tax right. But if you end your employment before using all of the periods and you don't start any more employment, then there's a possibility that you have overpaid tax. And this isn't anything to be concerned about, because if you've overpaid tax, you will be entitled to that tax back. If you do nothing at some point, HMRC should identify this and send you a rebate for the overpaid tax. But you can expedite this process if you're aware that it's a possibility. You can check your own income tax. You can either do a manual calculation from your P45 if that was your only income. If you're completing a self-assessment tax return, that would indicate that your tax affairs are a little bit more complex, so other things may sort of be at play there, or a simple telephone call to HMRC to say that you think you may have overpaid tax. Can they check and arrange for any refund of overpaid tax? Now, one thing to mention, which is quite obvious when we think about it, but does quite often be asked as a question, it's important to remember that if you haven't paid any tax, then you won't have anything to refund. A rebate is simply a refund of overpaid tax. So you have to have paid some tax in the first place to have overpaid tax. Now, conversely, if you sort of turn that on its head and you imagine a scenario where you don't work for the first 2 months of a tax year, and then say, for example, you don't work in April and May, and then in June you start working for an employer, then there's plenty of months left. The new employer will have your tax code and they will utilise your sort of missed allowance, if you want to think of it that way, but they will be in the initial pay periods. You will find you'll pay a little bit less tax as your income tax deduction is brought into line with your actual pay for the tax year. So in any case, regardless of what your situation is, it's always prudent to check that you have paid the right amount of tax, and you can if you can check that by a manual calculation from your P45 if you don't have any other sources of income. If you are needing to submit a self-assessment tax return, then that will calculate your tax liability and compare that with what's been deducted. But also, if you have a personal tax account on gov.uk, you can log in there, and in the PAYE section, you can check your income for the year, the tax, and whether that has been assessed by HMRC to check that the right amount of tax has been deducted. So hopefully that helps you to understand. And if you don't understand the whys and wherefores of how it happens, at least that you understand to check that you have paid the right tax, and understand that if you didn't work right until the end of the pay periods for the year, you may have overpaid tax. So thank you very much for watching. If you haven't already, please do subscribe to the channel. If you find the information helpful, please do pop a like on the video. That helps us to understand the topics that people find the most helpful. Thank you. Goodbye.